Good morning, everyone. Darius Dale here to present our macro minute for Thursday, March 3rd, 2022. Starting with markets, we have stocks down this morning, commodities up, crypto down, dollar up, global bond yields mixed with European rates rising and U.S. rates declining. Big movers this morning, we have copper up nearly 2%, Ethereum down nearly 2%. On the macro front, the first batch of services PMI data for the month of February were overwhelmingly confirming of our post-Omicron bounce view, reiterating what we discussed yesterday. The confirmed resilience of the US and global economies is largely responsible for why we have not seen more carnage in global risk assets in recent weeks. Our models point to mid to late Q2 as the likely spot where growth concerns should start to get broadly priced into asset markets, although we are sympathetic to that dynamic being pulled forward due to the melt up in food and energy prices. So, on the accelerating front from the services PMI data, again, these are February numbers. Australia, Russia, Spain, Italy, France, Germany, Eurozone, and the UK all accelerated. I suspect Russia might be decelerating next month in March. On the decelerating front, we have both Japan and China, but recall that both China's manufacturing and non-manufacturing official PMIs ticked up earlier this week. Elsewhere, we saw ADP Private Payrolls data out of the U.S. economy. These data points are the latest indication that the Fed may not receive any feedback from either the labor market or inflation data that they have over tightened for at least 2 to 3 quarters, which puts pressure on financial conditions to provide that signal. So you had the headline ADP number came in at 475,000 month on month. That's a slight decel versus a massive upward revision to 509K in January from an initial estimate of minus 301K. So big, massive, basically 800 plus thousand revision for the month of January, and then still continuing that real rock solid momentum at 475K month on month. With respect to today's probable range setups, looking to our global macro risk matrix, WTI crude oil is overbought, the euro 5-year forward inflation swap overbought, copper overbought as well, and then you got your U.S. 2-year inflation swap overbought as well. Oversold signal British pound, and still getting oversold signals in the 10-year boom, 10-year JGB yield, 10-year gilt yield, and 10-year TIPS yield, despite the bounce we saw yesterday. S&P 500, that is still bearish from the perspective of our volatility adjusted momentum signal. It's got minus 7.7% of downside in its probable range versus 2.3% of upside. WTI has got 25% of downside to the lower boundary of its probable range, and it's at the upper boundary of its probable range. Obviously, there still neutral VAMs. Bloomberg Dollar Index minus bullish VAM, still minus 1.2% of downside versus 0.8% of upside. 10-year Treasury yield bullish VAM, still minus 3 basis points of downside versus 39 basis points of upside. And then taking it to the chart here, Bitcoin here. So we got Bitcoin still bearish VAMs. Probable range here, we got minus 26% of downside versus, and it's at the upper boundary of its probable range. The one thing I wanted to call out with the chart here is that we did see this sort of upward sloping kind of, shift in the probable range process that I thought, hey, look, the market might look like it wants to bottom. It's starting to make some higher lows here. But again, as you can see in this sort of most recent week or two, we're actually starting to see the probable range shift back down. This could be a leading indicator for incremental downside. If we look at our Fibonacci analysis in terms of the bull run we saw from March of 2020 to, I want to say, let's call it, I believe it was May of 2021. The all-time high was in November of 2021. I think that the Fibonacci downside, the 61.8% support level, somewhere around 28,774 or something like that. Don't quote me on that, but I believe that number's coming from somewhere, but it's somewhere around 29,000. So be aware of that to the extent that this is a leading indicator for more downside risk. Looking at Ethereum, bearish FAM still minus 2.27% of downside versus 2% of upside in its probable range. And then lastly, gold, neutral VAM still minus 5% of downside versus 2% of upside. So with that, Darius Dale presenting our macro minute for Thursday, March 3rd, 2022. Best of luck out there.